Hi, this is Jason, Chief Technical Analyst with ToroAlerts with a sector review, taking a look at the Consumer Discretionary ETF, ticker XLY. So taking a closer look at the most recent price action going back to 2022, we can see that we're in this declining wedge pattern here, also up against the 200-day moving average, which we just hit on Friday, the 27th. And also that 200-day moving average is almost identical to that descending wedge pattern that we hit resistance on as well. So big question going into next week is that going to ultimately hold as resistance, and do we see a sell-off in consumer discretionary, or are we going to actually get a big breakout out of the consumer discretionary sector? So in the short term, we do have the FOMC coming up next week, and so that I think will have a big outcome on price action going into next week. But if we can get through that fairly unscathed and the markets hold up pretty well, then I think there's a decent chance we could break out of this descending wedge pattern. We're seeing a lot of these descending wedge patterns in 2022 start to break, and so as long as that doesn't completely blow this thing up next week, I think there's a decent chance we do break out to the upside on this chart. And if we do get a breakout to the upside on consumer discretionary, a couple key levels I'm watching closely for potential areas of resistance to the upside would be, we've got this anchored VWAP, which is also almost exactly in line with this Fibonacci extension level, so somewhere between about 162 and 164 on the XLY would be the next area of potential resistance I'd watch for to the upside. And if we can get through that level, then I'd be looking at about between 180 and 190 as the next two upside targets. We've got some huge volume resistance right around that 181, 182 level that we'd have to contend with if we do get up that high. And then more longer term, I think there is a potential, starting to look like a potential rally setup for the early part of 2023. So if that does materialize, those would be some of the upside price targets I'm looking for. But longer term, I am concerned about a deeper sell-off in the markets later in 2023. And if that does materialize, I've got a few downside targets that I've got projected on this as well. And what I did to calculate those is using some standard deviations on a logarithmic regression model. So I took a 20-year logarithmic regression model for the consumer discretionary sector, and that gave us a couple of key levels to watch for to the downside. So this red line here is kind of the middle range for that 20-year logarithmic regression model that we've got put in here. And then this line down here is our first standard deviation to the downside, and then the second line here with the dotted lines is the two standard deviations to the downside. And so if we do get that deep correction and a recession later in 2023, then I'll be looking for some downside price targets in consumer discretionary to ultimately play out somewhere at one of these two levels. We also have an anchored VWAP position that's sitting right around just below that one standard deviation to the downside, so that would be potentially another area of resistance. So if we get a kind of a more shallow recession and not an aggressive one, not a deep recession, then I think there's a chance that we just get down to that one standard deviation. But if we do get a deep recession, then we likely get down to those two standard deviations to the downside. And depending on how long it takes us to get there, that would suggest that we likely, assuming we get to those levels somewhere between, say, mid-2023 and mid-2024, that would suggest a bottom price target of about 65 to about 67 or so on the consumer discretionary if that recession does in fact play out. So got a couple of, I think, short-term upside price targets to watch for in the more shorter term, especially if the markets do hold up and we do continue to see this bullish price action move into February. And I think there are some upside tradable targets in consumer discretionary, especially with this if we get this breakout. However, we do need to be cautious going forward into 2023, as I think there's still a strong chance that we get a deep recession and a pretty deep correction in the markets as well. And if that happens, then we'll be looking for those standard deviation downside targets in consumer discretionary. So thanks for tuning in. Make sure to download the ToroAlerts app on the App Store. We've got one for stocks and one for crypto, and you can check us out at ToroAlerts.com.